Hi everybody, it is time for the Asian session update, and I wanted to do a recording a little bit early. There's just a few things we're looking at doing. We've seen a big move in the euro pairs, so I wanted to put this recording up so that we could just kind of be ready and watching these in place of a live session this afternoon. So what we are looking at in particular is a lot of activity on the euro pairs, and we're going to get right to that. As far as today goes, we don't have any other significant news from either US or Australia or Asia or anybody else tonight. So it should be pretty, I'm not expecting any massive surprise movements this evening, although it's very possible. Tomorrow, however, we have the German IFO. This can definitely move the euro a bit. It's not a huge euro mover, but it definitely can move it a little bit, so keep in mind that that is coming. And we've got more meetings regarding Greece and bailout and deals and so on and so on. And then tomorrow morning we have the final GDP numbers for the U.S., so that can also be a bit of a mover. So we've got some decent movement, some decent news tomorrow that could get the markets moving a bit. So let's look at our trades and see how this is all potentially going to play out. First of all, let's look at our Aussie dollar trade. So we've got our Aussie dollar trade. We hedged this one at 76.95. Now, if you didn't hedge, then you were stopped out. And if you were stopped out, then what I'm referring to in the coming chart in just a moment will just be a new entry for you, but for everyone else, it'll be an additional entry. So for those that hedged or for those that were stopped out, we're still looking to add a position at a certain spot. So here is the Aussie dollar. I like this trade still. It seems to be holding on very nicely. It's getting really choppy in here, really choppy. We hedged this one. We got in at 77.50, which was right about here. And we were in some decent profit. It ended up taking a little bit of a dip going into this week. And we got all the way down here to 76, just below 76.80. And we hedged at 76.95. Now this could still make a dip. It's only just a couple of pips, 30 pips away from our hedge area, 40 pips away from our hedge area. And it's just kind of bouncing around. And our original entry was 77.50. So option A, this moves down again, which is absolutely very possible. And it gives us an opportunity to lock in profit on that hedge and let the market come back up, kick that hedge out, and run into profit. Item B here would be that it doesn't do that. It simply breaks 77.50 and we just buy the break. And that is also a great bet. That is a super good potential move here on the Aussie dollar, and I like this whole setup. It seems to, it's definitely getting choppy, and it seems to have some nice activity in here, but I still like being long above this 7600 area. And we've got a pretty nice little trend line you can see here on the 1 hour chart that's been holding in pretty well. Some nice resistance now around 77.50. So the break of 77.50, if you got stopped out, let's look to jump back into this long. If you did not get stopped out and this doesn't dip down far enough for us to close that hedge with a little tiny bit of profit, then we'll just add an additional position and that will offset the hedge, and we can let this thing run and do its business. So either way, there's a good opportunity, but we want to be long Aussie dollar above 77.50. Now, the question is, where are we going to have stops? Where are we going to have everything on this one? If we're adding an additional position, we want to be really, really careful. If you don't feel like you can be a little extra attentive on this trade than normal, this is not our typical kind of set and forget. What I want to do on this is I want to get in at the break of 77.50. So basically I want to get into this thing around 77.55, 77.60, right in that general area, just a couple of pips above that 77.50. If we do get in there, I only want to stay in this trade if it can stay above, basically above our breakout level first and foremost. I usually try to give things 5 or 10 pips in that general area. So as long as this can stay above about 77.40, I want to stay in this trade. Otherwise, we'll get out of it. Now, I usually will never set a 10 pip stop or a 15 pip stop. So this is the kind of trade that we want to put a position on around 77.55, and if it can stay above 77.40, we'll stay in the trade. If it gets below that, let's just close the trade for a loss and see what. And first off, that will be a good signal that this is probably just going to continue to be choppy for a little bit, and it'll give us a good opportunity to close that hedge with some profit. And also it'll probably give us you know, a nice signal that things are just too crazy to even be getting into right now. So we can just kind of wait out the storm a little bit. The Aussie dollar definitely has gotten quite choppy. I mean, it doesn't take too much of looking at this to realize that it's just kind of a choppy mess. We had a nice little run up and a nice little run down, and it's just right back into that chop zone. But choppy means that breakouts are coming, and we've got some long wicks here. And this is definitely favoring our upside movement. So I'm pretty excited about adding a position above 77.50, but I want to keep a close eye on it. And if it can't stay above 77.50, let's exit quickly and just wait for this hedge and this original position to play out. If it does start to move and everything looks good, then let's hold on to this for at least 100 pips. Our original target is 80, but you know, with how much chop this thing has shown, we might be getting out of it sooner with a smaller profit, but with profit nonetheless. So that's what I'm looking for on Aussie dollar. EURCAD, we have a EURCAD trade that has been running for several days now. And the EURCAD trade was in at 138.50, and we hedged at 137.90. Now this EURCAD has been all over the place. At one point, it's just been everywhere, as we can see here. At one point, it was up a good little bit. Here's 138.50. And we saw that this was up 150 pips at one point. It's down and it's up and it's down, and it's kind of all over the place. So here's our hedge right here, 137.90, and you can see that we're a pretty good little amount past that hedge now. We're about 25 pips in profit on the hedge side, and our original position was 138.50. So that's we locked in about 60 pips on that one. And so not a huge gap to fill in, but we have to kind of watch this carefully. So here's what we're looking at on the EURCAD. We want to lock in profit on this sell hedge. We want to lock in profit on the sell hedge. Now, let me say this. If you are unable to watch this, because what might happen still is this could spike up, kick the trade out, and then continue dropping. So what we want to do is ideally, if we can start to tighten up this hedge, that would be fantastic. So we want this to run up and potentially kick the trade out and be ready to rehedge 10 or 15 or 20 pips higher and just kind of narrow this gap here. So our hedge is at 137.90. You could even do something like place a pending order at 138.10, 20 pips higher, so that if this gets kicked out, we can rehedge up there, because chances are this is going to chop around. We're in the summertime. This is what happens in summer. We've got a multiple week long channel here. It is coming to some good support. We will bounce off this level most likely, but in case we don't, this will probably just bounce around and chop around a little bit, which is totally fine. So option A is lock in profit, just 1 pip. Move your stop on that hedge to 1 pip in profit. Let this run up, take it out, and then let's either, if you can watch the charts, if you can be here and be present, then no need to put a pending order. You can just watch this run up and feel free to rehedge it at any moment, or it will probably just run back up to our original order, and that'll be back to zero and then start running into profit, and that's great. If you can't watch it, a good method is to let that stop you out and just rehedge a little bit higher here. This is what we do very, very commonly when we are hedging and rehedging orders. Is, you know, sometimes we have to rehedge things a couple of times to get out of a nice hedge situation like we have right here. So that's a couple of options. One thing I want to avoid, though, is just putting a stop loss on here, going to bed, and having that get stopped out and then continue dropping, and you wake up and you're 100 pips or 150 pips or 200 pips down. That's what we don't want to do. So if you're just uncomfortable with any of that, then just don't lock in on your hedge yet, and let's deal with it tomorrow morning. That's another great option. So there's a lot of things we can do here, but a great one is to lock in some very small profit, 1 or 2 pips on the sell side, place a pending order 15 to 20 pips higher than our hedge so that it closes our original hedge and tightens everything up by 15 or 20 pips. And that improves our hedge position and reduces our drawdown. And then chances are we'll have an opportunity to do that over and over again as this probably just bounces around. Otherwise, if it holds this area, remember we're coming down to 137, 50, 60 area. This is neckline territory. This is pretty important support. If this breaks and heads through this, then this could negate a major portion of the movement on this on this head and shoulders pattern. But if it seems to hold that 137.50 area, which I'm hoping it will do, and I think it's got a good chance to do it, then this could bounce off of this general area here and just head right back up again. So these are all things we want to be ready for. But if you can watch this trade, lock in, let it kick you out, and just ride it up as far as it'll go. If you can't watch it, place a pending order 10 to 15 pips higher, lock in 1 pip profit on the hedge, and let it just reduce that hedge size. If you can't watch it at all and you don't feel comfortable about any of this, then leave your stop loss off here and we'll deal with it tomorrow morning. So those are kind of our couple of options on the EURCAD. I hope that makes sense. And then last but not least here, the euro dollar, we were interested in 112.50 and 11200. This pushed through both of those levels and bottomed out at about 111.30 and really did well on this move down here, which is excellent. But now it seems to be holding fairly well. It's down into some of this good support here over the last couple of weeks. It's still very, very easily above 110.50, and I have a feeling the euro dollar is probably going to make a pretty nice turnaround and start heading back up. Now, we have to keep in mind this is a pretty decent double top right here, and this thing could just really start to head down. And 110.50 is our area that we're going to watch for. If this breaks 110.50, then we're starting to look to get short. But if it can hold on to these lows right here, then chances are this will give us a pretty nice opportunity to buy some of these dips. But I don't want to do anything while Europe is going and while most of us are asleep. So if you're awake and able to watch this, you can definitely buy against this 111.35. If you're not going to be awake all night, or if you're not in a time zone that favors this kind of thing, then let's just kind of wait till tomorrow morning, see what happens overnight. If the euro runs up 100 pips to 112.50, that's still a good area, and that still gives us a great opportunity to trade this up into 11500. So let's not be hasty. There's nothing to rush into here. But we definitely are looking at this point to get long euro dollar as soon as possible. Pound dollar, we're still looking for 15600 whenever that might happen. EURCAD, we talked about that one. Euro Aussie has run down into this major support right here, which is the 144.25 area. We're going to see if this holds. If that does hold, we'll be looking possibly for an opportunity to buy this tomorrow morning as well. Everything else is just kind of bumping around here. I'm not doing too much else with too many other pairs. These are all looking like good little situations and setups, and we'll address them as they come. The next session tomorrow morning should be very exciting, but we should have some good activity tonight. So let's keep an eye on the euro dollar as the market goes tonight. Pound dollar is much less of a rush. We'll get into a good little dip there. Aussie dollar, let's buy above 77.50 and keep some pretty tight stops. EURCAD, let's lock in this 137.90 and keep an eye on it and be ready to re-hedge. And we'll take it from there. So great little setups, guys. Good luck on everything, and I will keep you guys posted over Telegram with any changes or details that might happen there. Thanks, everyone. Good luck.